Emerging markets are fast becoming a driver of global growth. To explain which have the best prospects in 2013 and beyond is Sakthi Siva, Credit Suisse's Head of Asia Pacific and Global Emerging Markets Strategy. Sakthi, why should investors consider emerging markets?
We think there are two reasons for investors to consider emerging markets. One are the longer-term structural forces, good demographics, young population, good ROEs, rising ROEs, strong corporate balance sheets, good sovereign balance sheets, and improving trends in all of those. And then there's also the shorter-term factors. This year in particular, emerging markets have been a big laggard. We believe, because of special factors, that potentially could reverse, we think, quite soon.
Why have emerging markets underperformed so far this year?
We think there are three reasons why emerging markets have underperformed so far this year. Firstly, fourth quarter of last year, emerging markets had a very strong run. So we think the underperformance is partly a payback for the strong outperformance late last year. Secondly, inflation has been coming in some markets, probably higher than expected and probably earlier than we expected. So that's also a bit of a constraint. And third, for markets like Korea specifically, which is a play on global growth and a play on the US recovery, what's happening is investors are playing that through Japan rather than through Korea. And if you do have big markets like Korea and China not performing, it's very difficult for emerging markets to perform.
Korea obviously has good growth potential then. Which other emerging markets have good prospects?
The other market that we are also quite excited about is India. India joined what we call the cheapest four club on the 5th of March, about 2 weeks back. And India normally is seen as a more expensive market. So it's not often a market that looks cheap on our valuations. And historically, when India joins the cheapest four, it has tended to outperform. And within India, Indian IT is a play on US corporate capex recovery. So we've also got that angle. And we also believe that inflation in India is coming down, and that gives the catalyst in the form of the RBI potentially cutting interest rates.
Are there any major threats to the development of these economies?
I think the main challenge this year, and again one of the reasons why emerging I think has lagged this year, is inflation. Inflation is probably picking up earlier and faster than we have expected. We are hoping a lot of this is the Chinese New Year effect, but if the pickup in inflation is more permanent, that could be a major challenge for emerging markets, particularly for this year.
Thanks, Sakthi. For more insights from thought leaders, check out the Asian Investment Conference website.